Okay, so you know when you start thinking about retirement planning,
Yeah.
it can feel
Yeah.
like you're drowning in information,
Oh, for sure. So much stuff out there.
right? And like all these different ways to invest
You got it.
and what are you supposed to do with your money?
Yeah, where do you even begin, right?
Exactly.
For
So
us.
today we're going to try and cut through some of that noise.
Okay, love it.
We've been looking at this guide that makes a pretty compelling argument
Okay.
for adding gold
Okay.
to your retirement fund.
Interesting.
So we'll try to pull out the main points from this guide.
Sounds good.
And we really want to focus on, is this something that makes sense
Right.
for you to at least consider
Okay.
for your retirement plan?
Yeah, so let's just dive right in then.
Okay, so one of the first things that this guide really hammers home
Okay.
is the idea of gold as like this bedrock
Got it.
of value and this source of security.
Yeah, I mean, you hear that a lot with gold, right?
Right, and they really go back through history and point out that, for centuries,
Yeah.
when things start to get kind of shaky economically,
Yep.
gold has been the thing that people turn to.
It's like that classic safe haven, right?
Yeah, and it's interesting because they connect that to this idea of gold having intrinsic value.
Oh, absolutely. And I think that's a key point, right? Because unlike paper money, which can be printed,
Right.
gold is a finite resource.
Right. It has to be mined.
Exactly. It has to be dug out of the ground.
Right. You can't just print more of it.
You can't just decide to make more gold,
Yes.
right? And
Yeah.
and it's so interesting, too, because this guide even looks back at
Yeah.
ancient civilizations
Right.
and points out that even back then, with completely different
Wow.
monetary systems, they still placed a high value on gold.
That's really fascinating.
Yeah, it suggests there's like this inherent human thing where we just see gold as valuable because it's tangible and scarce.
It's like something about holding it.
Yeah, you know what I mean?
Yeah.
It's not
It's real.
just numbers on a screen.
Right.
It's a real thing.
So that scarcity, I think, really ties into that
Yeah,
sense of security.
for sure.
It's like,
Yeah.
I know there's only so much of this.
Especially these days where trust in traditional currencies
Right.
can be a little shaky.
Yeah. It's like, okay, well, maybe the dollar's not
Exactly.
doing so hot, but
yeah.
gold has always been gold.
Gold gonna be gold. You know what I mean? It's like
Uh,
that constant that people can rely on.
So the guide really positions gold as this fundamental
Yeah.
way to protect your wealth
Yeah.
against all these
I can see that.
economic uncertainties.
Yeah, it's like a hedge almost, right?
Yeah, go ahead.
Against all the crazy stuff happening in the world.
And one of the big things that people worry about when it comes to retirement
For sure.
is inflation,
It's the worst, right?
right? It's like you're working so hard to save,
Yeah, you put all this money away.
but then the value of your money is going down.
Your money's not going as far.
And so the guide spends a good chunk of time talking about how gold
Okay.
can act as a hedge against inflation.
So it's not just losing value as quickly.
Yeah, so they explain how historically
Okay.
gold has tended to appreciate in value during times of inflation.
Interesting. Okay, so it kind of goes up
Yeah,
as
it's like as
things get more expensive.
prices are going up,
Got it.
the price of gold tends to go up too.
Okay, and I guess that makes sense because
Right,
the
okay.
supply of gold is limited.
Right, it's not like they're making more of it.
Exactly. And the demand usually stays pretty strong.
Right, because people are looking for
They want that security.
somewhere to put their money.
Yeah, when everything else is going up in price.
Exactly.
Like gold feels like a solid bet.
So by investing in gold, you might be able to kind of maintain your purchasing power.
So you can still afford your lifestyle even as...
Right, it's like you're protecting your lifestyle
Yeah,
in the future.
because the cost of everything is going up, up, up.
Right, and it's not just about inflation. They also talk about
Okay.
how gold has kind of weathered
Yeah.
economic downturns
Interesting.
pretty well.
Okay, so even when the economy's not doing so great.
Yeah, like when the stock market might be taking a hit,
Right, right.
gold has often held its value.
Okay, so it's like a little bit of a safety net.
Yeah, so that's where this idea of diversification comes in.
Right, don't put all your eggs in one basket, right?
Exactly, and because gold often moves independently of the stock market.
Yeah, they don't always go up and down together.
Right, it can help to balance out.
So if one's down, the other one might be up,
Right.
and vice versa.
So that was one of the things that really stood out to me.
Yeah,
They talk about how gold can potentially protect
okay.
against something called quantitative easing.
Oh, yeah, that's a bit of a mouthful.
And I think for a lot of people,
Yeah.
that's a term they might not be super familiar with.
Not everyone's an economics expert, right?
So can you just break down what quantitative easing is?
Sure. So basically, it's when central banks
Yeah.
pump more money into the economy,
Okay.
usually with the idea of trying to stimulate growth.
Right, to get things moving again.
But the guide argues that this can actually lead to
Yeah.
Currency devaluation.
So your money's worth less?
Exactly.
Yeah.
You can buy less with the same amount of money.
Right.
And to illustrate this, they actually use the example of the U.S. going off the gold standard back in 1971.
Right, which is something the guide kind of keeps coming back to.
Yeah, it's a pretty pivotal moment in economic history.
And they point to the fact that since then,
Yeah,
the U.S. national debt has just exploded.
like it's gone through the roof, right?
And the argument they're making is that when governments
Okay.
print more money and keep accumulating more debt,
Yeah.
it actually makes the value of gold seem more stable.
Because it's not subject to those same manipulations.
That's it.
Like gold is this external benchmark almost that's not controlled by any one government.
So in that sense, it's kind of like a shield.
Yeah, a protection against those inflationary pressures.
Right, against those kind of forces.
That can erode the value of your savings.
And they also make the case that gold can just generally be seen as a safer asset than currencies themselves.
Interesting. And what's the logic behind that?
So they talk about how gold is recognized and accepted pretty much universally.
Yeah, gold is gold wherever you go, right?
Wow.
It's like a global language of value.
It's not tied to any one country.
Exactly.
Or economy.
It doesn't matter if one country is doing well or not.
Right.
Gold still holds its value.
So it's less likely to be affected by those kinds of fluctuations.
Got it. So if one country's economy tanks.
Right. Or if there's political instability somewhere.
Right. Gold's not going to be as affected by that.
And then they get into this whole discussion of gold IRAs.
Yeah.
And how those can potentially...
Okay, so this is like a specific type of retirement account designed for holding gold.
Right. And they focus on the potential tax benefits.
Okay, so what kind of tax advantages are we talking about?
So they talk about tax-deferred growth.
Okay.
Which means any earnings on your gold investments within the IRA aren't taxed until you actually withdraw them.
Oh, okay. So you get to let those earnings grow.
Right. It's like they get to compound over time.
Without being taxed every year.
Exactly.
That's pretty nice.
And then when you do withdraw the money in retirement, it might even be taxed at a lower rate.
Interesting. So there's like a double benefit there.
And they even mention potential benefits for estate planning.
Okay, so this could potentially make it easier to...
to pass on those assets to your beneficiaries.
And maybe even with some tax advantages for them.
So that was one of the things that I found really appealing.
Yeah.
Is that they talk about how you don't necessarily need a ton of cash on hand to start investing in gold.
Especially because gold can be pricey, right?
Yeah.
Like it's not the cheapest thing to invest in.
So they explain how you can use existing retirement funds.
Okay.
Like your 401k or traditional IRA.
Yeah.
To fund a gold IRA.
So you can kind of shift some of your existing savings into gold.
Without having to...
Yeah, without having to come up with a bunch of extra cash.
Now, liquidity is something that's always important to consider.
Oh, absolutely. Especially when you're thinking about retirement.
Right, because you might need access to that money.
You might have unexpected expenses or opportunities come up.
So the guide emphasizes that gold has high liquidity.
Okay, so what does that mean in practical terms?
It means it's relatively easy to buy and sell gold.
You're not stuck with it once you buy it.
Right.
You can easily get rid of it if you need to.
And they point out that there's a global market for gold.
Yeah, I mean, people all over the world buy and sell gold.
So there are all these different channels for buying and selling.
So like dealers and institutions and online platforms.
Right, and so that makes it pretty easy to convert your gold back into cash.
Yeah, if you need to access those funds, you have that flexibility.
And we've talked about diversification a little bit.
Right, that's like investing 101, right?
But the guide really stresses how gold can play a key role in diversifying your retirement portfolio.
So it's not just about stocks and bonds anymore.
Right, and they explain that because gold often doesn't move in the same direction as traditional assets.
It's not as correlated with the stock market.
It can act as a kind of buffer.
Yeah, like a shock absorber almost.
Right, because if the stock market is down, gold might be up or at least holding steady.
Right, so it kind of smooths out the bumps.
And that's where they contrast gold with stocks specifically.
Got it.
Because stocks obviously have the potential for big gains.
But they can also be super volatile, like a roller coaster.
And so the guide kind of presents gold as a way to introduce more stability.
Especially when you're getting closer to retirement.
Right.
You don't want to be on that roller coaster anymore.
Especially when things are uncertain.
Yeah, when the economy is going through a rough patch.
Right.
You want that stability.
And they give a bunch of historical examples
of
how gold has held its value.
So it's like a proven track record.
Right.
of weathering those storms.
So for someone who's thinking, okay, this sounds interesting.
Yeah.
What do I actually do?
Right. How do I actually get started?
The guide breaks down the basics of getting started with a Gold IRA.
Got it.
So they start by explaining that there are a few different ways to invest in gold.
Okay.
So you can buy physical gold.
Yeah, like coins and bars.
Right.
Like the actual gold itself.
Or you can invest in gold-backed financial instruments.
Okay, so things like exchange-traded funds.
Right, ETFs.
Or mutual funds that invest in gold.
But they pretty quickly focus on gold IRAs.
Okay, so why is that?
Because a gold IRA allows you to kind of combine the potential security of owning physical gold with the tax advantages of an IRA.
So you get the best of both worlds in a way.
And they say the first step is to choose a gold IRA provider.
And what exactly do these providers do?
So they basically guide you through the process of setting up the IRA and purchasing the gold.
So they're like your gold concierge. They help you with all the details.
And they also work with a custodian.
Okay, and what's the custodian's role?
So the custodian is a separate financial institution.
Got it.
That actually holds your assets within the IRA.
So they're like the safekeepers.
Right. And they make sure everything's compliant with IRS regulations.
So it's all above board.
Exactly.
And how do you actually fund a gold IRA?
So usually you do it through a rollover from an existing retirement account.
So you can transfer money from your 401k or traditional IRA.
And then once you've funded the account, you choose the specific gold products that you want to include in your IRA.
So like which coins or bars or which gold-backed investments.
And then the custodian actually takes care of storing the gold in an approved depository.
So it's not like you have to keep it in your house.
Right. It's held securely.
In a specialized facility.
And they talk about the pros and cons of owning physical gold versus investing in these gold-backed instruments.
Because they're both kind of ways to get exposure to gold. But they're a little bit different.
So with physical gold, you have that tangible asset.
You can hold it in your hand.
Right. It's like you own that gold.
But that also comes with responsibility, right?
Right. You have to store it securely.
You need a safe or a safety deposit box.
And you have to insure it.
In case it gets lost or stolen.
Right. Whereas with gold-backed investments, it's more convenient.
You don't have to worry about storage or insurance.
Right.
But you don't actually own the physical gold.
And they provide this step-by-step guide for setting up a gold IRA.
So walk me through those steps.
So the first step is choosing a reputable gold IRA company.
So you want to do your research.
Right. Make sure they're trustworthy.
And then what?
Then you complete all the paperwork.
The fun paperwork.
To set up the account. And then you fund the account.
Usually through a rollover.
Right. And then you select the IRS-approved gold.
So it has to meet certain standards. And then finally...
The custodian secures the gold in an approved depository.
So it's a pretty straightforward process.
Now, one of the big questions is how much gold should you actually have?
Because you don't want to go all in on anything, right? You want to have a diversified portfolio.
And the guide gives some general guidelines. But they stress that it really depends on your individual circumstances.
Right. Every situation is unique.
Your risk tolerance.
Yeah, some people are more comfortable with risk than others.
And your retirement timeline.
Like how far away you are from retirement.
Exactly.
That makes a big difference.
Because if you're younger, you might be able to take on more risk.
And you have more time to recover if things go wrong.
But as you get closer to retirement,
you want to be more conservative.
You want to protect what you've already saved.
Exactly.
So they say that a lot of financial advisors recommend somewhere between 5% and 15% of your total portfolio in gold.
So it's not like you're putting everything into gold.
Right. It's part of a balanced approach.
Yeah, it's one piece of the puzzle.
And before you even think about adding gold, they say you really need to assess your current retirement strategy.
So take stock of where you are.
Right.
See what you're already invested in.
How are your assets performing?
And how diversified is your portfolio.
Right.
Because that's going to give you a better idea of whether gold makes sense for you.
And they also recommend talking to a financial advisor.
Oh, always a good idea.
To get personalized advice.
Because they can really look at your specific situation.
Right.
And give you tailored recommendations.
And they caution against trying to time the market.
Yeah, that's a fool's errand, right?
Right. It's so hard to predict when gold prices are going to go up or down.
And you could end up losing money trying to time it.
So instead of trying to time the market, they say to focus on the long-term role of gold
in your overall portfolio.
So they suggest starting with a small allocation to gold.
Don't go all in right away.
And then potentially adjusting it over time.
Based on your needs and market conditions.
And they mentioned this strategy called dollar cost averaging.
Oh, yeah, I've heard of that.
Where you buy gold incrementally.
So like a little bit every month.
Right.
Regardless of the price.
To kind of average out your cost over time.
So you're not trying to guess the best time to buy.
And they stress the importance of staying informed.
Yeah.
About global economic trends.
Because those can affect the price of gold.
Right.
Things like inflation and interest rates.
Now, of course, every investment has risks.
Nothing's guaranteed, right?
And they talk about some of the risks associated with gold.
Okay, so what are we talking about?
So they acknowledge that gold prices can be volatile.
They can go up and down.
Right. It's not always a smooth ride.
And that can be nerve-wracking for some people.
And if you own physical gold, you have to think about storage.
Where are you going to keep it?
And insurance.
They protect it from theft or damage.
Now, for gold held within a Gold IRA, the IRS requires that it be stored in an approved depository.
So it's not just sitting in someone's basement.
Right.
It's in a secure location.
And they mentioned that there are different storage options within these depositories.
Yeah, you have some choices.
And they say it's important to understand the pros and cons of each option.
Like, what are the security features and what are the costs?
As you get closer to retirement, they recommend that you regularly review your entire retirement portfolio.
To make sure it's still on track.
And that includes your gold holdings.
Because your needs might change as you get closer to retirement.
And they say you might want to adjust your gold allocation.
So like increase it or decrease it.
Depending on your overall plan.
And how the market's doing.
And they say it's important to stay informed about economic trends.
Because those can affect the price of gold.
And eventually, when you reach retirement, you'll probably want to access the funds in your Gold IRA.
To actually use the money.
So they explain the process of liquidating that gold.
So how do you turn the gold back into cash?
So they say it's a good idea to check if your Gold IRA company has a buyback program.
So they'll buy the gold back from you?
Once you're 59 and a half, you can generally start taking withdrawals.
Penalty-free?
Without penalty.
And you can usually take those withdrawals.
Yeah.
Either in cash
right,
or by taking physical possession of the gold.
And it's important to note that for traditional Gold IRAs, required minimum distributions.
Those pesky RMDs.
Typically start at age 72.
But not for Roth Gold IRAs.
What?
That's a key difference.
So if you choose to sell the gold back to the company, you would contact them.
Yeah.
Let them know which metals you want to sell.
Get a price quote.
Right.
And then arrange for the funds.
To be transferred to your custodian. If you want to take physical possession of the gold, they'll usually ship it to you.
But there might be fees involved
right,
for shipping and insurance.
And at the end of the guide, they have this really helpful FAQ section.
Oh, those are always good.
That answers some of the most common questions.
What kind of questions do they cover?
So they talk about the historical stability of gold. They emphasize that while the price can fluctuate in the short term, it has tended to hold its value over the long term.
Especially during times of inflation or uncertainty, when people are looking for safe havens.
They also compare gold to stocks and bonds. And they highlight its role as a hedge.
Yeah, because it often moves in the opposite direction.
And a diversifier.
So it can help balance out your portfolio.
But they acknowledge that it might not have the same growth potential.
As stocks in some cases.
They also cover the tax implications of gold IRAs. And the different ways you can add gold
to an existing retirement account.
And they even give some advice on what to do if the price of gold drops.
Which can be scary, right? When you see your investments going down.
But they basically say, don't panic.
Keep a long-term perspective.
Remember why you invested in gold in the first place.
It's a long game, not a short game.
So to sum it all up, this guide makes a pretty compelling case for including gold in your retirement fund.
And what are the main arguments?
So they highlight its potential as a hedge against inflation. As a way to diversify your portfolio. They point to its historical role as a store of value.
Especially during uncertain times when
Right.
people lose faith in other assets.
And they emphasize the potential tax advantages
Yeah.
of holding gold within a gold IRA.
So it's not just about the gold itself.
Right. It's also about the tax benefits.
It's about the whole package.
And I think we've done a pretty good job
Yeah.
of pulling out the key points
I think so. We've covered a lot of ground.
without getting too bogged down.
Yeah, we've kept it pretty straightforward.
In the weeds.
Peacefully, not too overwhelming.
But ultimately, the decision of whether or not
Yeah.
to invest in gold is a personal one.
It's not one size fits all.
You have to consider
Yeah.
your own financial situation,
Your risk tolerance.
your goals,
And your timeline.
Yeah. And if you're thinking about it,
Yeah.
the guide recommends doing your own research.
Due diligence is always a good idea.
Talk to a financial advisor.
Get a professional opinion.
Then really think about
Yeah.
how gold might fit into your overall.
Your retirement strategy.
So as you're thinking about your retirement
Yeah.
and how to secure your financial future,
Okay.
what role do you see
Yeah.
tangible assets like gold
Okay.
playing in that plan?
That's a good question to think about.
Yeah, something to ponder.
For sure.
All right, that's all the time we have for this deep dive.
Great talking to you.
Thanks for joining us.
See you next time.